Hello and welcome to another program called Perspectives. I'm Dave Wittenberg, your host. I'm glad to have you here today. Today we have, a special treat for you. We have a guest here from an organization called Citizens for an Alternative Tax System. We've heard a lot in recent days about the flat tax, especially with the now completed campaign of Steve Forbes and his bid for the Republican nomination. In just a little bit, we're going to have a short film, around about 11 minutes, provide you a lot of information about another tax plan called a national retail sales tax. I think you'll find it interesting, to say the least. And then after that film, we'll interview a guest from that organization, and we'll discuss a little bit more some of the points made in the film. Now, if you will, just lean back and enjoy the following film, around about 11 minutes, on the national retail sales tax, and we'll be back afterwards with our guests, and we'll discuss what we see together.
We are saying there isn't going to be any more hidden taxes. There's going to be one final tax, and that's when you final purchase of an item. And I think that this is a measure that we ought to look forward to.
And so what we propose is the elimination of the IRS, not just flattening out the tax rates, which certainly would be better than what we have today. But we're suggesting something even better. The elimination of the IRS, the code, the IRS agents, the audits, the guilty until proven innocent, the whole business. Eliminate the income tax completely.
Washington Update is brought to you by Citizens for an Alternative Tax System. In this issue of Washington Update, we take an in-depth look at the legislation introduced by Representative Dan Schaefer and Representative Billy Tozan to fully replace the income tax in the IRS with a national retail sales tax.
People in this country don't have any idea really whether or not they're paying the right tax or the wrong tax, or even how much they pay. And I think that it's about time that we give them the choice on what they're going to pay in taxes in this country, and not for the federal government to just simply remove it in their check every week. I think that this is very, very important to them, and the savings is flat now, the wages are flat, and mainly is that people can't get ahead. And I think it's about time that they make the choices, and this is what we're going to do in the national sales tax.
Oh, the first thing you say is, wow, a big retail sales tax on top of the sales tax collected at home. Well, let me give you some great news. You are already paying a national sales tax. You just don't realize it. Every citizen is paying about 14% more for every product made in America because of the cost of the Internal Revenue System service. Tax collection and audits, paperwork that goes into the production of every product we make. Because everybody that produces any product for us in America has to go through that awful process of hiring accountants and filling out forms and paying income taxes. So that 14% of the cost of every product in America is the cost of the IRS system. But guess who pays it? The consumers of America, who've already paid an income tax on their income when they earned it. We would eliminate the cost of that income tax system in the price of your goods and substitute in its place a retail sales tax, so that all of us take all of our income home. There's no income tax deduction. You get all your money. That's like a big pay raise for every American.
The Schaefer-Tozan bill is titled the National Retail Sales Tax Act of 1996. The bill eliminates the personal income tax, corporate income tax, the inheritance tax, the gift tax, as well as all non-trust fund excise taxes. It replaces this entire group of federal income taxes with one tax, the National Retail Sales Tax. The National Retail Sales Tax will be collected each time you purchase a retail product or service. No individual record keeping, no 1040 forms to fill out, no April 15th deadlines, and no more IRS. The tax rate would be a low, flat 15%. A two-thirds supermajority vote of Congress would be required to raise the rate. The national retail sales tax is revenue neutral at the proposed 15% rate, bringing in the same amount of money as the current income tax system. Collection of a national retail sales tax will be accomplished through existing state tax collection administrations. All but 4 of the 50 states are already equipped to collect the national retail sales tax. States that do not have an existing sales tax collection method would have the choice of establishing their own or contracting with a neighboring state to collect the tax. Retail merchants and service providers who will be responsible for collecting the tax from the consumers will get to keep 0.5% of the total to offset their collection costs, and the state government will keep 1% of the total to offset their costs. The IRS would be completely eliminated, and a new collection department will be established under the Secretary of Treasury in order to supervise the collection from the states. Collection of Social Security and Medicare taxes will be turned over to the Social Security Administration. Some products and services are not taxed. 1. No business inputs are taxed. This means there is no tax on products and services that businesses buy or use in the manufacturing process or in delivering their service. Thus, no taxes are built into the price of products we buy. No chance of hidden taxes. 2. No tax is charged on the services of education and/or training. 3. No tax is levied on miscellaneous sales between citizens up to $400 per incident, with a cumulative total of $2,000 for the year. 4. No tax is paid on dues or contributions to nonprofit organizations. The Schaefer-Tozan bill creates a personal consumption refund, ensuring everyone a basic level of tax-free spending under the national retail sales tax. This refund protects poor and low-income Americans while putting more money in the hands of the middle class. The personal consumption refund is based upon the national poverty level adjusted for each individual family size. It is figured very simply by taking the poverty level times the sales tax rate, adjusting for the number of dependents, and reducing the wage earner's annual FICA taxes by this amount. Non-wage earning individuals who are currently receiving government assistance would simply have their subsidy increased by the amount of the sales tax. If you're a homeowner on the day of enactment of the NRST legislation, you are deemed to have paid the sales tax in full on your home. If you're a new home buyer after the enactment of the NRST legislation, you're treated exactly the same as you are now treated under the income tax. You currently pay tax only on the mortgage principal. You pay with after-tax dollars. Under the national retail sales tax, you would also pay on the principal, but over the life of the mortgage. For example, a taxpayer buys a $100,000 home. At a 15% rate, a tax of $15,000 will be paid over the life of the mortgage. If you sell your home and buy another more expensive property, you will only pay the sales tax on the increase of value of the new, more expensive home. For example, the owner sells the $100,000 house for $125,000. He or she will receive a credit of $15,000, representing the sales tax already paid when the house was originally bought. This credit would then be used when buying a new home. Used property or goods are taxed. However, an important rule is that the government only gets to tax a good once. The seller of the property gets a credit for the unconsumed value of the property or good. For example, a taxpayer buys a $10,000 car with a national sales tax of 15%, making the sales tax on the car $1,500. 1 year later, the individual sells the car for $8,000. The new buyer pays a sales tax on $8,000 for a total of $1,200. The original owner only used $2,000 of value of the car and therefore receives a credit of $1,200 for the sales tax he paid, which can be used against the purchase of a new car. In summary, prices go down and take-home pay goes up, offsetting the addition of the NRST.
The bottom line is you create job security, economic security for Americans out of a tax code that is now creating insecurity, that is creating a system where we discourage from producing, investing, and saving, and creating jobs in America. We take a system that's destructive, and we turn it into one that's constructive. We take a system that penalizes you for doing the right things in America. We create a system that rewards you for producing in America. We take a system that taxes us twice and end up with a system that taxes us only once. Is that worth doing? You bet you it is. Just think if tomorrow we accomplished that. We got rid of the IRS, the income tax system, and we had in its place a simple retail sales tax, equal or similar to the tax we're currently paying because of the income tax system on the price of our products. And at the same time, we created for the first time a real advantage for American manufacturers to make products and create jobs here in America. An advantage authorized under the GATT, the free trade agreements we've signed, and one that creates an advantage for American products over foreign-made products. What a huge economic boost that would mean. What a huge increase in savings and investment and income growth in America. The kind of job security people are beginning to debate in this presidential campaign. You want to do it? Join us. Join this effort to replace the income tax system, not add to it. Get rid of it. Replace it with a simple, straightforward national retail sales tax. It's the answer we've been waiting for.
Public support is vital to the success of this legislation. Citizens in their own districts hold the power of making this change. Write and visit your congressman in your district. Make this issue understood by the media and government officials. Gather together groups of like-minded individuals and get them talking and writing about the subject.